Greetings. Welcome to my weekend market recap, 5th March 2023. I'm Sagar Nandi, retired IT professional swing trading stocks using the Q systems and techniques that I develop. You may contact me using my email ID info@superiorprofit.co. I regularly share live market and stock analysis on my website superiorprofit.co, Twitter handle Superior Profit, and YouTube channel Trading Profitably. All these are open to the public and you are most welcome to make use of them. Good morning, Dr. Jeffrey. Disclaimer: this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. Options trading can be risky. You may refer to the characteristics and risks of standardized options document from OCC to decide if that is suitable for you. I use the Q systems for my trading. All the Q components run on Metastock platform and the technical analysis runs on TradeStation as well. That was the last slide. Let's continue starting with the global market analysis. And remember, though I am looking at global markets, sometimes I'm looking at global stocks, and most of the time I'm looking at USA market and USA stocks. The analysis can be applied to any market and any stock so long as they are liquid. The USA stock analysis can benefit global traders and global stock analysis can benefit USA traders as well. Starting with all ordinaries index, Australian market, it is range bound. Where is it inside the range? It is at the lower edge. What is the preferred trading direction? Up. What we have in last couple of days, we have a bullish headwind reversal signal that caught the very low. Amazing, isn't it? And then we had a bullish indecision. So we could start to be ready to buy, and this is an index. You could probably find stocks to buy right when the bullish headwind came. You may be in a profit in some of those stocks. The index itself is telling us to buy now. The same is true for weekly. Weekly is also at trend line support. It is also inside a range. At the lower end of the range, it found support. So our preferred trading direction is bullish. My preferred trading direction is bullish, and the market direction is sideways. Next is topics. Japanese market. You will see many of the global markets are telling us to buy now. And the same conclusion I think we will reach for the USA market as well. Topics index, weekly bullish. Last weekend I showed it was moving inside a range, consolidating the gain. Now it broke out of the trend line resistance. So it is telling us to buy using what kind of setup? Using a breakout setup. Japanese market also a buy. China market is the only one I saw that is not telling us to buy. CSI 300 range bound in daily. Weekly has a trend line resistance nearby. It is also range bound similar to Australian market, but it is in the middle of the range. That's a no trading area. So this is one market where it is range bound and we are not going to trade. India's Nifty 50. And before I open the chart, it is a good practice to look back and see how the past analysis worked out. And remember, the past analysis I share is always before knowing the results. And if I remember, I tried to bookmark that also. I tweeted about the Indian market. Again, the market is not important, the analysis is more important. I tweeted on the Indian market futures, Nifty futures, the major index future, on March 1. What did I say? I said that after many days, India's Nifty future is at a place where I would like to start looking for low risk buy setups. Will the same scenario play out in the USA? It did not play out in the USA on the same day, not on March 1, but we'll come back to USA market later. This tweet was about the India market, and see how I looked at the unambiguous charts. The weekly had a very long term trend line support. We had a bullish shape candle with a bullish indecision. It regained the watermark support, which in effect was a false downside breakout. And a little bit up move would have put price above the weekly trend line support. In daily, what did I see? I saw, like in case of weekly, it created a false downside breakout. Price regained the watermark support, displayed a bullish indecision on this day. The traffic candle color was still red. 2 days after that, the candle color changed to neutral and we had a bull release signal. Price came right to the white direction line. A little bit move up from there would have put price above the white direction line and it would have regained the weekly trend line support. See how I am anticipating price moves. To me, it was moving inside a range, the range bound by trendline resistance and watermark support. It was at the lower end of the range, started to go up after displaying bullish indecision, bull release, and I am ready to buy from that point onward. That would be a range bound market at the lower edge with the concept of box long trade setup. I would not buy index itself, I would have bought individual stocks that were giving buy setups at that time. So that was then, isn't it? 1st March. Now let's go back to our global market analysis and see how Nifty futures or Nifty index we can see any of them. Let's look at the Nifty futures that I shared in the Twitter in tweet. Nifty future, this is the future symbol. My tweet was on this day. It displayed the bull release and the candle color turned neutral. Next day it tried to come down but did not breach the stop loss. Stop loss would be below watermark support. That would be using the Q protection signal. It didn't breach that. Instead, on Friday, it sharply went up. It also displayed a bullish headwind reversal signal. Works pretty well. Caught the top very well. The very top very well in both daily and weekly. And now we have the bullish headwind in daily. We also have traffic light change to green, flow candle color as well. We also have big move up 3, very big bullish momentum. We have bullish pressure above average volume, and this volume pattern some people call stair stepping. Firstly, it changed from red to green and volume increase, that's stair stepping with bullish reversal. So we have plenty of bullish signs on Friday. You could buy on Friday during the day using real-time charts. You could buy at the close, but you could also buy based on the tweet I shared on 1st March. That's how Q traders tend to be a little bit ahead of others with pretty high accuracy. Now I did look at some stocks as well. Remember, the USA market did not give a buy signal on the same day on 1st March when I tweeted about the USA market. So I followed the stocks in India market, and this is a pattern I have described as one of my favorite patterns. This came in the stock Aditya Birla Capital, ADTB. It's a financial stocks. What is the favorite setup that I described here? Longer term weekly trendline support and shorter term daily trendline resistance breakout. So we have longer term support and breakout in daily. Daily is also breaking out of a triangle pattern. Candle was very bullish in shape and color, also had a bullish flow. Again, we can see the stair stepping pattern in volume. That was ADTB that I shared, and I have the Q systems like many of you. I could decide not only based on the technical charts. I did, as I always do, look at the stocks fundamentals. The industry was very strong on that day. Let's look at the fundamentals. See the earnings growth in the last quarter, year on year quarterly earnings growth. Huge earnings growth of 466%, and that jumped from 29%. We can also see the huge jump and very high value of earnings growth in the graphical form. In addition, we can see funds are accumulating. This is something that I pay attention to. The stock could be bought on 1st March itself, and also on Friday you can see. Sorry, let me see the tweet again. When did I tweet about the stock? About Nifty, I tweeted on 1st March, and this stock ADTB also 1st March. So this is ADTB on 1st March. On 1st March it could be bought, and QVital is real time, so we can see on Friday also 87% of PR stocks were up, and the stock itself was also up 1.4% on Friday. But it could be bought earlier itself. Let's see how the stock did. ADTB.NS. The breakout happened on this day. Next day the market was down. I showed just now the Nifty futures chart. On Thursday Nifty was down, but this stock did not budge. In fact, on Thursday this stock was up little bit. We know that from the activity bar being in green color, and Friday it resumed the up move. So the Nifty chart that I tweeted about worked out very well for long trade, and the only stock I shared recently in the Indian market was in the long direction ADTB. That was a breakout setup that also worked out very well. That is another two live examples of how I analyze instruments in live, share them before knowing the results, and they tend to work out very well. At least they do for me. So India market, after some time, let's go back to the Nifty chart, is time to buy again. Sometime in the past, it used to be the strongest of the global markets. Then it had a significant decline after displaying the bearish headwind. Now it is still inside a range, but at the lower edge of the range, and there are enough signals to start buying. The last of the global markets we study is FTSE market, UK market, FTSE index. In the last market recap also I told it was in an uptrend, and the uptrend is continuing. Weekly has a trend line support. So again, direction is up, and preferred trading direction is bullish. So of all the global markets, only China market I concluded that it was range bound, no preferred trading direction. All the other markets we have preferred trading direction as bullish. Therefore, I expect the global index as a whole also to tell me to buy, and this is the global custom index part of Q global market breadth, that is also inside a range at the lower edge of the range where it displayed cluster of bullish indecision, then a bull release, now a bullish flow. So you could start to get ready when you saw the cluster of bullish indecisions. You could actually buy when the bull release came. In fact, that was the day when India's Nifty future also turned bullish for me. And of course, as of Friday's close also, one could buy. Of course, this is a custom index. We cannot buy this index, but this would have given more confidence to buy in the global markets. Now let's turn to the USA market. For that, I will switch to Q Elite running on TradeStation. Before looking at the market ETFs, I have no fixed format for these sessions. Let's look at how the market internals looked on Friday in real time. This is in Q Elite, available in Q Elite. Here I am looking at the Nasdaq futures and S&P 500 futures. After the market opened, very quickly both the futures broke above early range high and then continued to move up throughout the day. That is the external view. Internally, what was happening? For advanced decline, it started with modest up value, but it closed much stronger. The beginning was modestly bullish, not so strongly bullish, but the closing was very bullish. Around 2000, 1500 is very bullish. So that was true for both Nasdaq and NYSE. The candle charts are of futures and all the other plots, they are of market internals for Nasdaq and NYSE exchanges. So advanced decline closed very bullishly and up down volume had the telltale sign of bullishness where up down volume steadily went up throughout the day. That is a telltale sign that people were buying mostly. So that is the market internal health we could see in real time for Nasdaq NYSE. But that's not all. I do have access to, Q traders have access to, and I do keep an eye on the major indexes also. So here I'm looking at Russell 2000 small cap. I'm plotting futures for candle chart and then I have the market internals below. So I have Russell 2000 on the left, then Dow Jones Industrials, then Nasdaq 100 and S&P 500. Now you see again in the beginning it was not necessarily that strong. It even declined a bit for all the major indexes for advanced decline, but it closed much stronger. That is for advanced decline. Whereas up down volume steadily went up. So it could be some shakeout in the morning, but closing was very strong across the board for the four major indexes and the composites as well. Now let's look at the market ETFs. Starting with SPY, weekly candle color is neutral, that's fine, it had a significant drop. Candle shape is bullish, and even more importantly we have a bullish reversal in weekly. In daily, we have a bullish flow shown by the tick. one day before we had a bull release signal. Earlier we had a cluster of bullish indecision. Remember, whenever there is a cluster of bullish indecision, I am getting ready to buy but waiting for a proper setup. Could be the bull release day, Thursday, or of course the bullish flow day, Friday. Now on Friday, if I look at the index itself as a stock, for example, or ETF, will I buy? No, because the trend line resistance is nearby. So if I had to buy this as a stock, I would not buy. But my preferred trading direction remains bullish, at least until it goes to the trend line resistance. And that is not only because I am looking at this chart, I already looked at the market internals. One observation I can share is that when Friday market closes so strongly near the high of the day, in the external ETF view, and we already saw the internal view was very strong at the close. If Friday closes so strongly, it's more likely than not that next week it will go up, at least for enough amount to give us profitable swing trades. But still, having said that, SPY is not one I am going to buy. There are plenty of stocks where trendline resistance is not nearby. I have not looked at them. We can look at them together if we have time. But SPY preferred trading direction is bullish, especially looking at the weekly reversal and very strong closing on Friday. And QQQ, again, cluster of bullish indecision. It was inside a range created by yellow direction line and trend line resistance. It was at the lower edge of the range. One could buy on Thursday. That would be the perfect day to buy. On Friday at the close, I wouldn't buy because the trend line resistance is nearby. But preferred trading direction is still bullish because the weekly is looking very bullish shape and it also has a bullish reversal. Dia, see the difference between Dia and SPY QQQ. Firstly, Dia's candle color in weekly is still bearish and it does not have a bullish reversal. Of course, the candle shape is bullish, but comparatively, we can see Dia is weaker. Dia had been weaker for a very long time in this area also where it was range bound. It is at the lower edge of the range, had cluster of bullish indecisions, then bull release. Thursday was the perfect day to buy. Friday I would not buy because it is inside the range, in the middle of the range, but because of the external view, preferred trading direction is still bullish. IWM is one I could buy on Friday at the close. Why? Because this has no trend line resistance in daily. It cleared the trend line resistance, also displayed the bullish flow, a possible flow trend following long setup. Strictly speaking, no flow setup because the weekly candle color is not cyan. So I will take it as a breakout setup. And also notice one thing. This is of course one of Dr. Jeffrey Scott's favorite setups. Stock in an uptrend, ETF in this case, IWM, stock in an uptrend, pull back to support, yellow direction line, white direction line happens to be there, it is holding both of them, and then go up from there with some momentum. Is there some momentum? We look at the momentum. Why don't we look at the momentum chart? We have one PSAR reversal and MOBO breakout and Bongo turn green. Not a lot of bullish momentum dots, but that is okay. It's an index, it's an ETF. Individual stocks, I'm sure, would have given breakout setups or other trend following long setups with more momentum signals. So, market ETFs, many of them are range bound. I will not buy because trendline resistance is nearby, but IWM is different. It has broken out of trendline resistance. So, that could be bought as an ETF, and we could and will probably try to do that. Drill down into Russell 2000 stocks find stocks in strongest industries, find stocks with great fundamentals, and see if they have nice trade setups. So this external view is bullish. Let's also look at the market breadth from Q Global, a unique single chart view. Now, once again, you see the power of this analysis, very visual analysis, right on this day when we had the phoenix symbol, phoenix candle color designed by Mr. Ian Woodward, may him rest in peace. There is a way this signal can be used. Two ways, multiple ways actually. If it comes near a swing high after the market went up for a number of days or weeks, if the phoenix comes near the high, we take it as a sign that market may continue to drop and look for short trades. But if it comes near the swing low after market has dropped some, and in this case is stopped at the two direction lines, these are actually 50-day and 200-day moving averages, not Q direction lines, stopped at the two moving averages, two major moving averages, then how we use it is look for a bullish move, and that is exactly what I mentioned in the last market recap, that if phoenix has come, let's see if we can get an eureka signal or accumulation count. Both of them came on Friday, not on Thursday. Thursday we could buy based on the external view. There was not enough bullish signal in the market breadth total view, but that came on Friday with the eureka as well as accumulation count. The accumulation came from where? Let's look at that. It came from NYSE, not Nasdaq, and it came from S&P 500. So it could be large cap, non-tech stocks. That is what you could prefer based on this. Again, this is market breadth, high level view. When we drill down, we can look at stocks in strong industries, strong fundamentals, nice trade setups with low risk. But at a higher level, we can see from this market breadth total view that I may prefer non-tech stocks and large cap stocks. Now, is there an anomaly there? When I looked at the external view, I wanted to buy IWM, but when I'm looking at market breadth total view, I'm saying I'm favoring non-tech. Non-tech has no conflict with small cap non-tech, but I'm saying large cap also because of S&P 500. No, there is no conflict, because when I looked at the external view IWM chart, I was looking for exact trade setup. On Friday, IWM was probably not the strongest one, isn't it? IWM went up on Friday by 1.4%, but QQQ went up by a bigger percentage. SPY also went up by a bigger percentage. So when I looked at individual ETFs charts and I was looking for trade setups, though SPY QQQ went up more, the low risk trade setup was in IWM. Whereas when I'm looking at market breadth total view, I'm trying to assess that what kind of trades are preferred. Here I am not looking for a trade setup in a particular instrument. I am looking at market breadth. This is internal health check, not about finding a trade setup. So that is telling me that I may favor non-tech, has no conflict with small cap, and large cap also. At the same time, if I compare small cap versus large cap over longer term, then we may say that it is still uptrending. The last couple of days small cap is underperforming. Over longer term, small cap is doing better, so there is no conflict. And about growth versus value, to me it is looking like it is flat. Last couple of days little bit tilting up, but is still inside a range, so I may be agnostic to growth and value. So this chart, the internal view is also telling me to buy because we have a phoenix and then one eureka and accumulation count after that. Is there any overbought sign anywhere? The percentage of stocks above 50 MA just crossing 50% level, far below the upper threshold of 80%. It's not overbought. 3-month new high low was in the lower half, now moved into the upper half, but still below the upper overbought threshold. So it is not overbought. So this is a sweet point where we are bullish. I am bullish, but the market is not overbought. So that's a time to buy for me. Now I did tweet something about USA market also. This one on 2nd March, that is Thursday. See, 2nd March 1 p.m. New York time, I shared the Q Edge snapshot that shows the sector industry stock advance decline from 1 month to 1 day, and because it was during market hours 1 p.m. New York time EST, the real-time column was also filled. And what did I tweet? I tweeted the sector industry stock advance decline graph over 1 month to all the way to right now in real time shows that bulls are trying to take control but not successful yet. Will bulls be successful before the close? As of my post, you could say the advance decline was neutral. We could not say that it was more bullish than bearish, but when I looked from longer term to shorter term, it looked like bulls were trying to gain control, and in real time I could anticipate bulls taking over. This is how it looked like at 1 p.m. on Thursday. Let's look at Q Edge sector industry stock advance decline graph now. Now using Q Edge, and you will see how it has changed. Great, isn't it? Now we don't have real-time data. We ignored the leftmost column. Market is closed for 1 month to 1 day. Now we see that there is no doubt. I anticipated that bulls were going to take control, and that happened. And I anticipated based on visual graphs, not my arbitrary thinking. And that anticipation again came true. If you use the Q systems with discipline regularly, you will come to anticipate things, and more often than not it will come true, because we are looking at internals. When we look at Q Edge, this kind of breadth inside or global market breadth, those are internals. Internals, I say, tend to precede externals, not the other way, not the other way around. So now long term is bearish. 1 month 10-day long term is also bearish. 5-day medium term is bullish, and 2-day 1-day they are also bullish. Both 2-day 1-day are very bullish. So earlier, remember the graph I showed in Twitter, this was looking mixed but improving from red to green. I could anticipate that continuing, and then I could look at the market breadth total view, I could look at the ETF charts, future charts, and then anticipate long trades, and that came true. Now 2-day 1-day they are very bullish. Is it overbought? Let's look at it from bucket analysis. If we look at the bucket analysis, 55% of stocks are still below mid Bollinger Band. So it is still bearish from that angle. The balance is more to the bearish side. And that is fine. As I explained, I take many bullish trades, that is buy stocks, when the market is not uptrending. And we saw that other than IWM, the three market ETFs, SPY, QQQ, DIA, they have trendline resistance. So it's expected that many stocks were also down. That is fine. So it is still bearish from that angle. But the question is not that. Question is it overbought? Because we saw Q edge market breadth in the sector breadth is very bullish. Is it overbought? That answer comes from percentage of stocks above upper Bollinger Band, that is percentage of stocks in the uppermost bucket, that is overbought when it reaches 30 to 40% level. And if you are listening to me for long enough, you know that several of these features I added based on Dr. Jeffrey's input. Thanks to Dr. Jeffrey for that, and I find great value from this real-time analytics. So it is not overbought from bucket analysis in any way, whether we see the percentage of stocks above Bollinger Band middle or above Bollinger Band upper. It's not overbought. That's the time to buy. And let me also look at the sector performance graph. Every market breadth, I don't have time to look at everything. Every market recap, I don't have time to look at everything. Now, let's look at the sector performance graph over 5-day, 10-day, 1 month. I don't have the snapshot now, but a few days ago, all the bars were, or most of the bars were below the zero level. And when all or most of the bars are below the zero level, that's the time I start to look for buying. And every time it happens like that. After being overbought, it turns bullish. And the signal of turning bullish is when we see the 1-day, 2-day bars start to turn bullish. 1 day, then next day, then next day. And now we can see several of the bars in the longer term graph are already on the upside. So what I am doing here, again I am looking at the oversold condition when most of the bars are below zero in the longer term periods, maybe all the periods or most of the periods are below zero. Then I am looking for bars in the shorter term, 1-2 days, to come on the positive side. And this happened on Thursday, Friday. Maybe for some sectors it happened before other sectors. Now is it overbought? No. Here also we can see overbought condition from the bars being most or all above the 0%. That is nowhere true. So it was very oversold. You can see now it was very oversold. Now the oversold condition has given away, but it is not bullish. If we look at 5-day, 10-day, one was still not bullish, but shorter term is bullish. That is the sweet spot to buy when market is turning around. Why I say that's the sweet spot to buy? Because that will give me the lowest risk entry points. I always try to manage risk first. Profit takes care of itself if I am disciplined enough. So Q edge is also telling us to buy at a sweet spot. What about technical breadth from Q finder? All graphical analysis. I am very visual trader. Balance between bulls and bears, technical signals and setups, weekly interval. All signals 78% bullish, trend signal 84% bullish, continuation 75% bullish, even reversals 81% bullish. Absolute number of reversals are much more than absolute numbers of here bearish strength. So everything is bullish in the weekly interval. What about daily? Also bullish. All categories bullish and all categories above 90% bullish. That is very bullish. Absolute number of bullish reversals much more than absolute number of bearish strength. So everything is bullish. Is it overbought? Technical breadth becomes overbought when most of the bullish signals come from the pendulum high area. So this percentage becomes more than 50%, is nowhere near that. Now most of the signals are coming from pendulum middle. That's again a sweet spot to buy. Some you could buy from oversold level also, pendulum low. Those are great long-term investment opportunities as well. Of course, we look at sector industry fundamentals before buying, whether we are buying from pendulum low or pendulum middle. But we can see there are many stocks to buy that are not overbought. Now, whenever these actual trade setups come near 10% or more than 10%, it is easier. I always say it's easier to find trades from those categories. So I can see on Friday we have 9.6 percentage of stocks in my liquid stock universe. 9.6, let's say 10% stocks had breakout and 12% stocks had trend following flow setup. So I could combine them. I could look for breakouts with bullish flow, and I see large number of gap ups, 40% gap ups. That's a very bullish day, and we saw the closing was also very bullish. So we could try to combine these three. Sometimes the gap ups may not give low risk entry point, but we could try to combine all of them, or at least the breakout with bullish flow. Now sometimes breakouts may also not give low risk buy point. IWM is giving a low risk buy point as a breakout, but sometimes stocks do not. We can look at them. We could also look at just flow setups, and then if we wanted, we could of course combine momentum signals. So technical breadth is also telling us to buy. Now I want to review one more stock before looking at live trade setups. That is the stock owned by the world's richest person, Mr. Elon Musk, and see once again how Q analysis works out. And all this analysis I shared in live market earlier. Tesla had a huge drop and it is nowhere near earlier peak. And when the price came near the low in the weekly chart, Elon Musk was not the richest person anymore. Of course, he was still very rich, but not world's richest person. And then the stock rallied. It didn't rally enough to break the trendline resistances in weekly. It is still in a downtrend in weekly chart, but this move has again made Musk the richest person in the world. So how much was this move? In fact, if we look at the close of the day, we had the bullish headwind, the unique reversal signal. And now let me look back on the analysis I shared at that time. Very reliable in my experience, but you could see for yourself when you apply. It had jump thrust low, pendulum low. There were multiple big move down 3, then out of nowhere, and right at that time in live market recap I mentioned several times that out of nowhere came a big move up 3. And in my opinion, that buying was not because of retail traders like me. That big move up 3. We or I don't buy when a stock is falling like this with all the news being negative in the market. Some production cutting, some problem with management, whatnot. Byte, BYD taking over Tesla, all negative news came. But the system told us that some people stepped in and bought when it was falling like a knife. Would we buy that day? Q setup says no, wait for a proper signal. That would be the bullish headwind signal, unique reversal signal. Caught the, if you look at the closing basis, that was probably the day it got the very low. It never closed below that candle's low after that. That was the day to buy. And that is the analysis I shared at that time. Again, a very reliable pattern. So two reliable patterns or two favorite patterns I shared so far. One was weekly trendline support, daily trendline resistance breakout, and the next one is also jump thrust low at pendulum low, then comes big move up 3, then wait for the next Q long setup. Now now let's go back and see what is the percentage change from the bullish headwind day to the high of this bar. And if I hold the mouse, you can see the third number from the bottom, 91%. That was a huge move up, 91% from the bottom. Now if we are if I'm swing trader, I would have bought and sold at least partial position on the way. Some people are better than others in holding stocks for longer term. They could hold the stock all the way until recent days. And in recent days, what can we see? Again, it not only would have helped us to buy at the very bottom, and again, this is a stock that was to be bought as per my live analysis, that was in a very much downtrend. Nobody would have told that this was a stock in an uptrend. So we could buy that, I could buy that. Now, how would we exit? Partial position profit we could take along the way when the risk was covered, and next position we could hold using Q protection signal trailing stop. It can be used in different ways to apply trailing stop. And then we could see that it came to the very long term trend line resistance in weekly, came to trend line resistance in daily also. So that would be another point to book profit, or if you wanted to hold longer term, you could sell calls against it, or you could simply exit the trade, wait for the next opportunity. When the next opportunity would come, if it is consolidating now, I don't know it will fall or not, but if it is consolidating, then one may wait for a breakout again to buy, or one may wait for it to come to a trend line support, or in this case yellow direction line support, go up from there. Could do that also. Breakout is an obvious choice if it can do that. Now let's also look at the protection signal to see how we could use it along the way. So our buying decision would be on this day when it displayed the bullish headwind in the entry chart, and now I change to the protection signal stop chart. As the stock moved up, notice how the magenta dots went up. Did it ever touch the magenta dot, especially on a closing basis? Close below the magenta dot? No, 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 no. On a closing basis? No. If we see the strictly magenta dot, on a closing basis? No. Here. So we would exit the trade here if we used only protection signal. However, we are not going to use only protection signal. Remember, when it came here, it hit trend line resistance. So what we would also observe, that it was in an uptrend, then it was hitting trend line resistance, starting to move sideways, then the candle color turned red. We would not necessarily wait for the stop loss to be hit. We had huge profit. We know now it's more than 90% profit on the remaining position. We could exit the trade, or if you wanted to hold longer term, you could sell calls against it. That is how we could not only enter the trade but also manage it. Now remember earlier when seeing Q Finder, let's go back to Q Finder. What did I mention? I mentioned that firstly I mentioned that this is not overbought because the percentage of stocks giving bullish signals from pendulum high, that is extreme high level, is not above 50%. And I mentioned we could buy these stocks. And what did I mention? I mentioned that when we buy stocks from pendulum low, they can be swing trades, but they can also be longer term position trades or longer term investing opportunities. So in Tesla, we found a stock that gave a buy signal from pendulum low, the bullish headwind reversal signal, that we could buy at the very bottom. That is how you could use Q Finder and Q charts in different ways. From Q Finder, you could actually go to the bullish trades, and here are the pendulum paintbrushes. If I want to look for stocks that are giving buy setups only from pendulum low, I could click the red button. So all these stocks are at pendulum low, and now I could look for buy setups. There are plenty of stocks that are giving possible buy setups from pendulum low. So that is one way to look for swing trades that can also be that could potentially turn into longer term investment or longer term position trades. Now we could do that, look for stocks at pendulum low, but I'll not do that. Instead, I'll go to You could do that yourself, but let's go back to Q edge. On Friday, all sectors were up, 100%. All sectors were up, 95% of industries were up, 83% stocks. Very bullish day. Now, which sector was up the most? Energy, 2.1%. The weakest was still positive, but weakest one was consumer staple, 0.3%. That is a defensive sector. And I can see communication services also was down by less than 1%. You can say it's mixture of defensive, non-defensive. Facebook is, I think, in com services now, whereas AT&T is also there, Verizon is also there. So it's maybe it is more defensive than non-defensive. All the other sectors went up by more than 1%. And energy is the only one that went up by more than 2%. So it makes sense to look for energy stocks. And when we are talking about energy stocks, now we could look at the commodity futures as well. We could look at futures, we could look at the ETF. Let's look at the futures. We have access to the futures. In Q Global, we have access to, I think, every symbol that is possible to trade in the world. Let's look at the oil futures. CL. Remember the IWM breakout? This is even better than that. Here it is breaking out from both daily and weekly trendline resistance, breaking out of triangle pattern in both weekly daily. What does it mean? When we have a triangle pattern in weekly for a long time, and in fact it created a double bottom and consolidated at the double bottom level for a long time, so sideways move for a long time, then if it breaks out in either direction, the expectation is, based on past experiences of many traders, it's a general study that after long consolidation, if it breaks out, it will continue to, I cannot say it will continue, it's more likely to continue to move in that direction for longer period. The longer the consolidation period, the bigger the magnitude of the subsequent breakout move. That's why I said it is even better than IWM, looking breaking out very nicely after long consolidation. And also we can see it did hit jump thrust low and then continued to consolidate once again. I am doing this live analysis. The bullish headwind, the unique reversal signal, caught the very bottom. Price never closed below that. And that brings me to another point that I mentioned earlier. When I take these reversal trades, I can take reversal trades using headwind, bounce, box. I can take trend following trades using pullback and breakout and flow. If I'm taking reversal trades, like in this case using headwind, then the initial trade may be taken using options verticals with short option vertical, not long call vertical in this case, but short put vertical, where time decay would be in my favor, delta will of course be in my favor. That is the best setup, best choice of instrument for me for reversal trades. For breakout trades, you could go for the futures, of course, if you are trading futures, high leverage, high risk instrument. I don't suggest that for new traders. One could trade the ETF USO, can be traded as stocks, or you could go for long call vertical, short put vertical, both. Now, difference between the use of verticals at the breakout point and reversal point is that at the reversal point, I always favor shorting the vertical. At the breakout point, I am agnostic. It is okay to short the put or buy the call. I will little bit prefer buying the call vertical, meaning long call vertical instead of short put vertical. Why? I can adjust the strikes in a way on USO, for example. Why don't we look at USO also, the ETF, to make sure it's actually giving a buy setup or not? Yes, it's also giving a buy setup. Weekly is, I think technically it has broken out. Futures has broken out, so technically this is also broken out. Daily has a clear breakout. So here what I am saying, I am slightly in favor of long call vertical than short put vertical, unlike the bullish headwind point. Incidentally, the ETF also had a bullish headwind near the bottom, but bullish headwind I always go for short put vertical bullish trend. At the breakout point, I am okay with both, but slightly in favor of long call vertical, because I can adjust the strikes in a way that can give me 1:1 or 0.5 or even 1:2 reward risk ratio, whereas short put vertical, I think the best I can achieve is 1:1, maybe sometimes less depending on how the strikes are adjusted, without increasing too much risk. So that is my preferred choice of verticals at the reversal point and at the breakout point. So USO is looking strong. Why did I come to USO? I came to USO because, and the futures, oil futures, because at the sector level I saw energy is the strongest by far. So now let's do a top-down analysis. Let's go to the energy sector and see, is it just one day wonder or is it improving over a period? It is actually the strongest over 1 month, 10 day, 5 day, 2 day, 1 day. So this is strong. It's not a turnaround case. Relatively speaking, energy is the strongest. Relatively speaking, this is showing relative score. So relatively it is still the strongest. So let's look at the underlying industries, drilling down into the industries, and I am going to not choose the industry that is red, oil and gas drilling. Relatively speaking, it is not strong. Yes, it was still up on Friday, but relatively speaking, it was not strong. I'm actually going to focus only on the industries that has a checkered background. Those are the industries that are among the top 20% of all industries, not only top 20% of energy, top 20% of all industries. So I'm going to highlight these few industries. What did I do? I chose the strongest sector, then I chose the strongest industries, not only in that sector, but among all sectors. Then I'm drilling down to stocks. Now I could use the blue button, cyan button here to look at S&P 1500 stocks. I could use the orange button to look at my liquid stock universe. So let's go to QVital now. Let's go to stock universe, go to liquid stocks, create a scorecard of all my liquid stocks. 1764 stocks. All these stocks are highly liquid. I think number of shares traded per day 500,000 minimum, and price greater than $5 if I remember correctly. So I am generating a scorecard of these stocks. No data is stored, and when I'm running the YouTube live session and I'm also running streaming software, it's slower than usual trading hours. And I'm also in Thailand in a village, not in a city with high speed internet. High speed, but not as high speed as you would expect in USA or Singapore. In any case, first thing we notice that the universe itself, liquid stock universe, very bullish on Friday. 85% of stocks were up. But I'm not going to go to the scorecard yet. Remember what I did? I looked at the sector industry, found the strongest sector, the strongest industries. Now I'm using the orange button to drill down to the liquid stocks of these 4 industries only. I could use the cyan button to look at S&P 1500 stocks, but instead of that, because I don't trade S&P 1500 stocks that are not liquid enough, I'm going to look into my liquid stock universe only. These are the stocks. Single click and you can see all of them are in energy. Now let's just find the stocks that were up. I'm using all the smart action buttons, smart filter buttons at the top. Now there are many stocks. So many how many stocks in fact? 65, and all of them are up. I want to see which one of them are fundamentally very strong. Let's start with 3-star. That is both undervalued as well as having very high earnings growth or high earnings growth. Actually very high in this case. All the numbers are very high. Happens to be very high. More than 50%. That's great. More than 50% earnings growth in the last quarter for all these stocks. All are undervalued. Now I'm not ready to open them yet. I'm clicking the Q Finder button. Look up Q Finder to see their trade setups. Not just bullish signals, and only these stocks have possible trade setups. And one of them happens to be, I'm doing this live, happens to be at price extreme low. This one. That has a breakout setup, AR. In fact, all of them are breakout setups. Interesting, isn't it? Notice one thing. One of them has flow and breakout both. One of them has breakout and gap both. Remember when I looked at the Finder home graph, daily graph, I mentioned that when we have 10% or around 10% or more than 10% in any category, it's easier to find trades combining those categories. So we have now one example, but we started with top-down analysis from Q Edge. You could do the same analysis bottom up. Starting from Q Finder, you could combine breakout with flow. You would come up with that energy stock, one of them. You could combine gap and breakout. You could come out with the other one. So why don't we look at some of those stocks we came out with. AR. Let's look at AR. It is at pendulum low. In Tesla's example, we saw it can be a swing trading position. It could also lead to a longer term position trade. AR and Antero Resources. You can see the name at the top. Antero Resources. It has a breakout setup. Interestingly, okay. Let's now see how the patterns play out. Will it make a big move of 90%? I don't know, but it has a low risk setup with one caveat. I will come to that. It came near jump thrust low. In fact, it did hit jump thrust low at pendulum low. Then all of a sudden came big move up 3. The exact pattern that played out in Tesla. And in my experience, a very reliable pattern if the stock is fundamentally strong as per Q scorecard and in a strong industry. All those are true for this stock. Now, what is the caveat? The closing is not as bullish as USO or the oil futures or SPY or QQQ. All those ETFs futures closed right at the high. But it happened that AR little bit pulled back at the close. So what is the Q guideline? Not take a trade at the close on Friday. Not at the close on Friday, but watch how it is moving on Monday. If it goes above Friday's high, take a long position with stop below this level using Q protection signal. We would not have to use this low. This low is good enough. Use Q protection signal for that. That's giving a low risk buy setup. Breakouts don't always give that, but this is giving a low risk buy setup. Now, if someone was doing the same analysis using live systems, I'm expanding the chart, expanding the price scale. You see the breakout happened much early in the day, and you could find that in real time using QFinder either on TraceStation. On TraceStation's radar it is slightly easier, but you could also do that on QFinder, on QGlobal, on Metastock. The breakout happened here. So if you found that in real time, you could take a position during the day. You could probably book partial profit near the close, and two things you could do: either book partial profit, hold on to the remaining position, or book full profit on the stock position and buy either call vertical or put vertical, bullish verticals at the close, using the profit. That way you have a zero risk trade going into the weekend. Now I looked at the daily, but I always look at weekly, daily before buying, and I'm going to open the momentum charts also in this case. Okay, interesting. Weekly has a watermark support long term, creating a false downside breakout. That's bullish. Daily has a breakout. So again, this is in a way a pattern that that's also similar pattern, isn't it? Weekly support and daily resistance breakout. In the momentum signal, we have PSAR reversal, MOBO breakout, bongo. So this could be one buy setup. But what I like most about this stock is that came to jump thrust low at price extreme low, then gave a big move up 3. That would not be the buying position because top would be very far, but now it has a very nice breakout subject to price going above Friday's high, or you could take a position using real-time charts early in the day on Friday itself. Okay, that was one stock. I know I am beyond 1 hour, but let's look at let's see if any of the other stocks have a more bullish close. I'm looking for stocks that does not have an upper tail. Not sure I'll find it or not. It will be a little bit surprising not to find it because USO was very strong at the close. Okay, one is this is PUMP. I'm reading the tickers and the name at the from the top. PUMP. I'm not going to buy it because it has trendline resistance nearby. Close it. CRK. This is in my bullish watch list. It broke above one trendline resistance, closed just below the next trendline resistance, hit near jump thrust low. Now see the difference. CRK and the other stock I already chose AR. See the difference. Here it is near jump thrust low. AR was already at jump thrust low. Here we have up to big move up 2, but AR had big move up 3. This has yet to break out of the second trendline resistance. Price closed below that, whereas AR broke out of the nearby trendline resistance. So in every respect, technically AR is better than CRK. Again, let's keep the, why don't I get the other stock side by side. This is what I do sometimes. Not exactly like that. Okay, okay, I'll come back to that. So AR, CRK, I'll come back to their comparison, but let's look at the other two stocks. Let's look at ARLP. I'll come back to how I compared the stocks, keeping them side by side in a moment. Well, this has a nice breakout. This is ARLP, nice breakout in daily, but weekly has trendline resistance nearby. I'm not going to buy it. Close it. Let's look at this one, weekly, daily. DINO, Dino, again has trendline resistance in daily, weekly, both. So I'm left with AR. That's fine. I just looked at energy stocks. There are other industries, other good fundamental stocks. Now, what I was saying, if I have two stocks that are both potential buys are about to be ready to buy, I may keep them side by side. That makes the visual comparison much easier. AR and the other one was CRLP. No, what was the other stock I wanted to compare? Probably ARLP or someone. But anyway, whatever with the stock, we could look at them side by side. Not ARLP, what I was saying. Was it CRK? Yes, CRK, right, CRK. See the differences. I could remember that, but again, side by side, let's look at the difference. Here we have a clear breakout. Yes, we have an upper tail in daily, but the breakout is clear in case of AR. In case of CRK, one trend line breakout, but other trend line resistance is above the closing price. So AR, the left stock, is favored. AR hit jump thrust low, then gave a big move up 3. CRK came near jump thrust low, not magenta on both dots together, and then gave only big move up 2. So clearly, from many angles, AR is favored. Both are fundamentally strong, both are in strong industries. So that is how you can do top-down analysis, bottom-up analysis, or fundamental first analysis. But I will not stop. I will need 2-3 minutes to explain one more thing. Remember, we saw IWM, and I mentioned IWM is giving a proper Q trade setup, clear breakout trade setup, and an ETF that is holding both white and yellow direction lines. That's a very bullish pattern. So if I am not going to buy the average of 2000 stocks, what I could do, I could go to QWhite, and I don't want to buy average of 2000 stocks. Why will I? Because I have the ability to go to the index and do an analysis of the Russell index, Russell 2000 index. Just type the index in the index tab. That's the logical Q index program, part of physical Q vital file. Once I type Russell 2000 or any index in any country, any market. That's the beauty of the Q systems, global systems. It shows the percentage up down, advanced decline over 1 month to 1 day, and it will show real time during market hours, but now market is closed, 78% up. But what I am going to do is create a scorecard of these 2000 stocks. Happen to be 1926 now. That's what Refinitiv is returning me. That's fine. Large enough universe. I'll show index first. This approach, you may say index first. And why did I choose Russell 2000? Because IWM was the only ETF of the Mark 4 market that gave a proper buy setup. So I am looking to buy small cap stocks. So I am doing index first analysis, not fundamental first. Well, from index first, I am generating the fundamental scorecard, but starting point was not a trading universe, but starting point was the index itself. Give it a few seconds to calculate the scorecard. Now, as you can see, several workflows are possible: top down, bottom up, fundamental first, and index first, and you could also do seasonality first. Now it has generated the scorecard. Now what I'm going to see, there are many approaches. Let me show one way. You can play around the systems and create an workflow that suits you. Create a workflow that suits you. I use multiple workflows. So I'm going to the scorecard. I'm choosing the stocks that are up by at least 1%. You can see some stocks are up by huge percentages. That can happen more for small cap stocks, but I'm only interested in stocks that are having at least some fundamental strength in terms of either value or growth. So I click the green one star, 522 stocks. I'm going to click the lookup finder. So I have now 203 stocks. These are now not only small cap stocks, these are also small cap liquid stocks, and I'm going to click the setup button. Now I'm left with 69 stocks. Now I'm going to look at their scorecard, or you could look at their technical charts from here. So let's look at some. I will look at not the one that went up by 19%, the stop would be very far away. Let's look at this. Let's look at three stocks. Well, PD happens to be a breakout from a trend line resistance. Remember again, I said in Q Finder, when you see large number or large percentage of stocks in one category, it's easier to find trades from that category. So I'm going to look at PD using weekly daily. PD is the ticker symbol. Weekly allows me to buy for a breakout trade. Stop loss will be just below the trend line support, narrow enough to consider a buy. But you could look at its fundamentals. Fundamental strong, we already know. You could look at its industry as well. Okay, PD, we found one possible setup, but we did not look at the industry. To save time, I'll not look at that. Let's look at the other few stocks. EVGO, one trend line resistance breakout, but another is nearby. Going to skip that. Why buy stocks like this when I have stocks with open sky above? ADNT, ADNT also has a trend line resistance nearby, so I'm going to skip that. That's how I can quickly go through the stocks and find stocks that are low risk and also don't have resistance nearby. You can implement multiple workflows. You will end up at the end of the day, at the end of the analysis, at the same list of stocks, or more or less the same list of stocks. In summary, from every angle, market is telling us to buy. It was down for a long time, then it is turning around. That gives a low risk buying opportunity. It's not overbought from any analysis. All the 360 degrees analysis are telling us to buy, and there are many stocks that are giving low risk buy setups. I in fact took a number of long trades at the close on Friday. I used real-time charts. I'm in the opposite time zone. I entered in the morning session and I'm holding them. If they continue to be bullish, I may add to them. Let's end today's session here. Thanks a lot for joining. I look forward to seeing you in my next session. Most likely it is going to be the next weekend. As usual, I'll share the date and time on Twitter before the session. As this live analysis show, as all the Twitter forum posts that I share before knowing the results show, and what I always say, there is no reason not to trade profitably if, two ifs, you have a robust system and you follow that with discipline. And of utmost importance, in my view, is that I manage risk. If we do that, there is no reason not to trade profitably. I hope you do that. Thank you and see you again. Bye bye.